I don't mind.
Awesome. Okay, like I said, the first thing you do when checking for support and resistance is to identify the movement or the direction of the market. Before you check for where there is support and where there is resistance, firstly, check what is that market saying. Is the market directing to the upside, or is the market directing to the downside, or is the market flat, whereby it's going up and down almost at a similar level? So it is when you have firstly identified that aspect of the market before you can start checking for the support and resistance. If you remember the last earlier, we said that support and resistance help us identify the strength and the weakness of a market. You remember?
Yes.
Okay. So with that being said, moving straight to the market, this is a GBP JPY on a 4-hour time frame. And now we just moved it to a daily time frame. Okay. Allow me to remove this here too. Now it's a full plane chart. Now, when you see a full plane chart, you make sure you get it. Usually we tell people when you want to analyze, make sure you get a minimum of 1 year time frame. Okay.
Okay.
Within 1 year, put it on a daily chart and then check your chart within 1 year. It is usually advisable. Well, remember we talked about the y-axis and the x-axis. Remember?
Yeah.
So you check your y-axis for the prices. It's
So
okay. Yeah. Then you check the x-axis for the time and dates. Right?
Yes, sir.
All right. So now when you set your charts like this, make sure it gives you 1 year time frame. This is March 2022, or rather April 2022, and this is April 2023. So this is a best way to look at a chart. We look at this chart, we call it a year over year or year on year, YOY. All right. Now,
Yes.
without being established, then you can start checking for the direction of the market. If you look at this particular chart we have here, Great British Pound and Japanese Yen, for short, GBP JPY, what direction would you say this market is moving?
It's going down.
Awesome. Awesome. Okay, but in actuality, this market is a flat market. All right. This market is a flat market because it is not showing you a major direction it is taking. You could see, starting from this point, the market went up, came down, went up, almost similar up, came down, went up, came down, went up, came down, went up, came down, went up, came very much down. So this is the point where you would think the market is going down, but unfortunately, not long, it came back up again to that same line. You see that?
And yeah.
Continuing, came down, went up again, thinking it's going to give a very good, line movement, and then came back again to the same line. You see? Went up, came down, went up, came back down, went up, came down, went up. So at this point, it was already showing it might be bearish, but then it came back up again. So what you would call this kind of market, it has almost equal movement, almost equal highs, and almost equal lows. So when you call this kind of market, pardon the rough work there, you can call this kind of market a flat or retracing market. That means GBP JPY in the past 1 year, from April 2022 to April 2023, has been a flat market. There has not been a direct move. You understand that?
Yes, sir.
Awesome. Okay. Now that being said, let's move on to the next phase. The first thing, like I said, you identify where is this market going. Now, this market is currently showing me a flat market. Do you understand when I say a flat market, what I meant by a flat market or a retracing market?
The retracing market is not moving, it moves on like almost the same direction. It goes up the very same distance it went up, it will also go down.
Awesome. That is it. It's not telling you, it's not giving you any signal going up to the higher up or upwards, uptrend. Neither is it giving a signal that is going down or downtrend. Rather, it's just, maintaining almost similar highs and lows. That is why we call it a retracing market. Okay, before I move on to support and resistance, let me show you another market so you also understand better. Okay, I'm going to use the same GBP JPY, but let me try and check for a different market under the same currency pair. Okay, in this particular market, you could see this market, though it has highs and lows, but you could see that the highs are higher and even the lows are higher. So this is a kind of market we call an uptrend market. The market is going up. So we call it uptrend or bullish.
Okay.
So that you call it uptrend or bullish market. Some calls it bullish, which is more like the most popular name, and some calls it uptrend. All right. So you call it bullish or you call it uptrend. Okay, with that being said, let's identify another market very quickly. You already know that other market I'm going to call now. Okay, let me see if I can use the same market to identify another market, the same currency pair rather. Let me see. Okay, we're getting there. Let me see. Okay, we're almost there now. Almost there. Okay, I think I should just look for another pattern, another pair that can give me a very good example. Awesome. This is USD CAD. That is United States dollars and Japanese and Canadian dollar, sorry, United States dollar and Canadian dollar. Okay, looking at this particular chart, you can see one thing that is common. The market is just going down. That is it. That is how sweet it is. The market is just going down. You can see it came down, it went up, came down, it went up, came down, it went up, came down, and so on. But one thing that is common is that though it is coming down, but it comes lower than the previous, It comes lower than the previous, right?
Yes, sir.
And that is it. And this is why we call it a downtrend, or a bearish market. Downtrend. Oh, I like my diagram. It is so beautiful. Don't worry. Very soon I'll be an artist. Yeah, you call it downtrend, or you can call it bearish. The bears. These are just nicknames that great traders designed for them, and this is what we call them: bearish or downtrend movement. Is that understood?
Yes, sir.
Okay, beautiful. All right, with that being said, now we can go on to identify support and resistance. Remember I said this is the first thing you look out for. The first thing you check is, where is the market going? You first identify the direction of the market before you start looking for the strength and the weakness, the support and the resistance, the point where the market starts and the point where the market was resisted. Never forget these things. Yes, okay. Sir. All right, let's go back to our first GBP JPY example on the daily time frame. GBP-JPY. Yeah. Okay, so GBP-JPY as an example on support and resistance. Remember we said when we check GBP-JPY, we identified as a flat market. So on your MT5 or MT4, always come to this point where you have tools, right?
Yes,
These
sir.
are where you have tools, okay? Should you get to that place and you didn't find no tools, sometimes you could open your MT4, MT5 and it's just open. You can simply come to insert, you click, and then you go to object or expert or script, and then you can add, or you can go to view. Easy way, you go to view, you click, and then you come to your toolbars. When you come to toolbars, you click, right now I've already done that, you click standard, line studies, and time frame. Time frame shows you the time frame. The line studies shows you the tools you use to study the chart,
Okay.
like your trend line, your vertical line, horizontal line. Yeah, then the standard shows you this aspect of the market, which is this. These are for the standard, to zoom in and zoom out, to quickly push the market to the present day, or keep it still at a particular day. Okay. All right.
Okay.
Now, with that being said, let's look at the tools. In this place, we're going to be using this flat line here. Can you see this flat line?
Yes, sir.
This flat line here is called the horizontal line, and the straight line is called the vertical line. And of course, this other one is called the trend line. If you put your laptop, your cursor to it, it can even give you the names. Okay. So at this point, we're going to be using, because this market is a flat stock market, we're going to first of all be using the horizontal line. Now, in identifying support and resistance, you first of all look out for the highest highs, which is, in this case, this is the highest high. And then the next thing you're going to check for is the lowest low, which in this case is this. You see that? Now, having done that, you have identified the support and the resistance of a market.
Are you still on a year time frame, or did you
on a daily time frame that is showing you a year-over-year data?
Okay.
Yeah, you understand? Do you understand?
Yes, sir. So on this higher, the highest point, you take it from the last one, or you just take it wherever it is, as long as it's the highest?
The highest, yeah.
Oh,
within
okay.
that time frame you have opened, you go to the highest. Where is the highest? That is what we call the all-time high.
Okay.
Within that time frame, that means from March 27th, 2022 to April 10th, 2023, the highest JPY had gotten is 172.082.
Okay.
That is the highest, that is the all-time we are checking there. Okay. And then the lowest it has fallen to within the same time frame is 148.742.
Yes.
That's the lowest. So this is how you analyze the financial market. And once you are done with this analysis, you check that first aspect. The next thing you're going to be checking is you now start checking the individual resistance and support. You have first identified the highest highs and the lowest lows. The next thing you're going to be checking is individual resistance and support.
Okay.
Right? Okay. So in this case, at the beginning, it's very important you identify as many as your eyes could see. It is very important at the beginning. Never, the chart may look very rough while identifying it. It's okay for the chart to be rough. You are just trying to help your eyes to easily see where there are support and where there are resistance. Then as we go on, we will now start checking for major supports and major resistance.
Okay.
Is that okay? Okay, then
Yes.
moving forward, we can check here. There is a support here, or rather a resistance. You can see that.
Okay.
Next, we're doing it together, right? And next, there is another one here. Okay.
Okay.
And there is another one here. I missed it. Okay. And there is another one here. You just got to keep looking. You see, this is where individuals see differently in the market, depending on how deep their eyes can see. See, some people can randomly just look and they just point what they want, but some can painstakingly look very keenly into the market to be able to identify precisely the different support and the resistance. Okay, another one is here, and there is another one where the market currently is, and there is another one here, right? Okay, no, I missed one here. Yeah, there is another one here. There's another one here, right? Okay, there is one here too. Does it look like drama? Does it look like...
I was about to ask, why so many lines?
Like I said earlier, I addressed it earlier. I said you have to identify every resistance and support that you see as a beginner.
Oh.
Yeah, make sure your eyes see everything that is support, that is resistance. That is where you start from. You are trying to train your eyes to be able to see where is there a support here in this market and where is a resistance in this market. It is vital, you know that. So that is why you're seeing so many lines. Like I said, it's going to be rough, but you will have to make sure that you are identifying the truth. Okay?
Okay.
All right. So, and there is another resistance or support here. We are trying to identify, you are checking everywhere. Everywhere you are checking here, you are checking here, you are checking here, you're checking everywhere. Everywhere. You're making sure nothing is left. Nothing is left. You're making sure nothing is left. As many as my eyes can see. You see, this is where there are, like I said, this is where traders differ. You see, some traders may be able to see a little, some may not even see at all, some may see so much. You must identify every aspect. In this case, I'm using trend line. I mean, horizontal line to identify. Okay. This was how I learned the financial market. This was how I learned resistance and support. Identify everything to make sure my eyes always see it. So that today, I no longer draw lines like this today. I can look at the market and easily see I can pinpoint the major. Why? Through practice, I was able to know. So this is the same way we are bringing to you, to practice so that you can learn. Don't start as a pro and just look at the market and tell me, no, I'm seeing a buyer, I'm seeing a sell. No, before you identify a buy and a sell or any execution, first identify the strength and the weakness of the market, which is a support and a resistance. Okay. So let's continue to use our trend line. There is none here so far. Oh, there is one here. Awesome. Awesome. So this is just identification, right?
Yes.
Yeah. So as we move on, we'll talk more about some other aspects to know. We are just marking every point where the market made a move. Either it was resisted to the upside or it was resisted to the downside. Either it started from the to the upside or it started to the downside. However, we are making sure we don't leave no path behind. There's a support there. You see that? There's a support here. You see that? And of course, we have already marked the last one, which is here. So this is how, my friend, you identify support and resistance. Now, this is just for a flat market. You see how rough it looks?
Yes.
It helps you to be able to identify, to check. Now, when you are done identifying these, do you see that? Is it good for your side?
Yeah, I see it.
Can I wipe off?
Yeah, it's okay. You can wipe it off.
Awesome. Now, when you are done identifying this, you go ahead and remove everything. It's back to a fresh start. The next thing you begin to check for now is major support and resistance. You see, you have identified all the support and resistance.
Okay.
Now it's left for you now. You now want to check what we call major support and resistance. This is now the actual strength and the weakness of the market. Now, how do you check major support and resistance? To check the major support and resistance, there are two major ways. Number one, you check the point where a market made similar move at a similar point at least 3 times.
Okay.
That place you can call a major support or a major resistance. A place where the market moved and turned. Either the market was resisted or it started at 3 different occasions, or in 3 different occasions rather. That is a point you call your major resistance or major support. I am identifying these here now. I'm identifying these. It's difficult to just mark them like this, and that is why we use the horizontal line. With the horizontal line, it makes it easy to just get 3 points at a time. Can we practice that?
Yes, sir.
Let's go. Let's use the horizontal line. Starting from the top side, we're going to mark here because we are seeing that there is a place here, there is a place here, there is a place here. But where exactly is that place? Let's check it. Awesome.
Oh, yeah.
You see that? Now,
Yes.
once we have said that, then we're not going to confirm. Are we right or wrong? Is this the best? If I bring this up, it only gives me one place here. This one and this, but this is not sure. Okay, then let me bring it here. If I bring it here, it's still not sure, but it's better.
Yeah.
It's better because it gave me a full house here with just some weak. Remember, we talked about strength. The body is the strength and the weak is the weak part.
Yes.
It gave me another strength here. It gave me a weak cover here. It gave me a weak cover here. It gave me strength here. It gave me a weak cover here. And it even couldn't come. So I can take this point as a major resistance to his buy and a major support to his sell.
So this support, when you put it, that line that you have just drawn now, it has to be like directly on top of the body, or it doesn't matter as long as it did touch the candle.
Yes, it has to be directly on either the wick or the body.
Oh, okay.
Yes, it's very important. And the most important is that it must touch the body. That's the most. Where you consider the wick is where you have it similar point up to 3 places.
Yeah.
Yeah. So that's where you consider the weight. But most cases, the body is always better because you want to check where it has a stronger strength tone, and another stronger strength tone. That tells you that that is the point where enough of, using this example, that was a point where a lot of sellers invested more of their money. And then immediately there was a lot of sellers removing their money or investing to push Japanese yen down, or buying more, or removing their money from Great British pounds. At that point, that is where you look at as your major resistance to a buy and a major support to a sell. Remember, we said the resistance, remember the principle, the resistance of a bullish market is the support of a bearish market, and vice versa. Yeah. So having identified this as a major resistance or support, the next thing we're going to check again is another major resistance and support. We're going to look for another one. Even if we put this here, it is still a major, right? It's still a major, but not much more. Just to emphasize that point you raised, it is still a major. You could see there's a wick here, and there is not much happening here, just some kind of shrug movement. And then there is also a body here. You can see that. There is a wick here also. There is a wick here. And that is it. So that can also qualify for a major support and resistance.
Okay.
Okay. And the next is to look for another mark. Remember, now we are looking for major supports and resistance zone. We're looking for another mark where 2 to 3 points met. In this particular trade, we have them a lot. In some trades, you don't have them much. Okay. Let's check here. Yeah. This is another point. You could see, though the market broke it here to the up and to the downside at the same time, but it resisted it here. It resisted it here. It resisted it here twice. The same thing, it broke a little, but still took it as a support, though it broke it. It resisted it here. It broke it here. It came back. It took it as a support before it moved. And that was rough. I know you couldn't see it clearly, but and even here, you could see here. Now, this is the technicality of trade. This is the beauty of Forex. This is a part where when Forex mentor tells you they spend time on the chart, this is where it starts. You start by, there are other things you're going to be learning. All right, talking about candlestick patterns and chart patterns, candlestick formations, but you cannot give a clear, vivid understanding on those things if you don't know how to identify weakness and strength of a market. Okay.
Okay.
Awesome. Let's go for more. And let's go for more. Okay. And where the market currently is, as at today, is a major support and resistance. It's more like an average. If you want to check GBP, JPY, currency pair in the last 1 year, it is currently sitting at an average price, whereby the market has moved across it several times. You could see, broke it, went up, came back again, broke it, had some fun, came back, broke it, had some fun, broke it, passed again, and so on. You could see the market has just been doing those plays up and down, passing this line. Remember, this line is what we are looking for.
Yes.
Yeah, I think I should change the color so it makes more sense. Let me change the color. To change the color, you just go to the horizontal line and right click on your laptop, and it will show you options to change the color. Okay, let me change the color to green. Green, yeah. So when you see the green, you know we're talking about a major resistance. Or I should change it to white.
No, white is not gonna be. It's not gonna be visible enough.
I
Remember,
think
the
so.
background is almost whitish.
Yeah, I think it will. Let's try.
Or
Yeah.
yellow, maybe. Oh yeah, there
Oh,
it is.
yellow. Okay. Yeah, yellow.
Yeah.
Okay, so when you see the yellow, you know we are talking about the major support and resistance, as well as the average price in this particular GBP JPY currency pair on a year-on-year time frame. Okay.
Okay.
And then moving on, we're going to be checking orders. I think there is this. Let me change the color back to our purple. Yeah, there is this. Okay. Now this is better because the market has come several times to this point and it has relied so much on this particular point. Okay, so this is the last one is going to be here. See that you put it here, or you can even put it here. You're not wrong. Either way, you are doing well. So once you have done this, you have successfully identified the different major support resistance zone in the market, particularly this market we are trading, GBP JPY. Okay.
Yes, sir.
Is there any question?
No, so far I'm good.
Awesome. Beautiful. Now that you have identified this, never forget it. This is a study on its own. It's a study on its own. Always look into this beautiful structure and, you know, master it. Let your eyes fall in love with it. Let your eyes be able to see it and identify itself as a spouse to it. So that wherever it sees the market, it could just, ooh, that's a support right there. And that's a major support right there. You know, that is how you should trade the market. Sweet and fun. Okay. Now, moving on to the next class or the next subject you should still know with regards to support and resistance. Remember, we only use this flat surface market as an example. We are also going to be checking bullish and bearish. Okay. But for now, let's continue using this as an example, the flat surface market or the retracing market. And when you have finally identified the major supports and the major resistance, why do we identify these support and resistance? Remember the first reason we said it is to identify weakness and strength of a market. And by so doing, we meant that identifying the weakness of a market tells us the time where if it's bullish, buyers are putting more money or they are being pressured by the sellers. Okay, using an example, take this point for instance, okay, and take this point also, and this, and this. Now, looking at this market, right?
Yes.
The sellers were making a very good move to this trade, and this move was just going smoothly. But unfortunately, when it got to this point, what happened? Buyers began to pressurize it. You see it? Buyers began to invest more. Like, no, we need more JPO. We need more GBP here. We need more GBP. It's impossible for GBP to continue going down and for JPY to gain strength. No, let's give GBP hope. Now, when buyers start investing more, now when we say buyers, sometimes it could be as a result of good positive data that happened in GBP, Great Britain. It could be as a result of those positive data that made buyers invested more, which led to the upside movement. You see, this was a strength coming, a full force movement coming downwards to the advantage of JPY and to the weakness of GBP. But then JPY, for whatsoever reason that happened that day, got its strength. GBP got its strength, and buyers began to invest more in GBP.
That's why it went up.
That was why it went up. It could be that it wasn't just buyers buying GBP. It could be that it was sellers, or rather investors in JPY, that removed their money from JPY. And that led to a push-up. Now, when the market got back up to this point here, right? It got to this point, it couldn't continue. It fell again. When it fell back to this point, buyers couldn't accept it. They added more money. The more the market tries, the more buyers are adding more money. You see the market going up. It got to this point, there was a stronger move again from JPY. No, man, this is just how the market is. It's a fight. That's why they call it bulls and the bears. The buyers are the bulls and the sellers are the bears. So the fight continues over and over and over again. As long as there is a buy, there is a seller to sell. As long as there is a sell, there's a buyer to buy. If there's no selling, there's no buyer. If there's no buying, there's no seller. Right?
Yes.
And so on, the market moved on, right? At this point. After all the long story over and over and again, came back, went up, came back, went up again, the same struggle continued here. Remember this fight here?
Yeah.
The fight started again here, right?
Yes.
And then went up, came back again, the same fight happened again. Went up, came back again, the same fight happened again. Now, when it starts happening like this, that is what we call major support and resistance.
Okay.
That similar fights are happening in the same spot. Why is it that, if you want to bring it to African spiritualism, they tell you that, why is it all spiritism? Why is it always happening here at this line? Why? There must be something. Right? Yeah, there must be something actually. The actual fight in financial terms will tell you basically or economically that this stand as an average price at this point. That these two countries don't want their price to go below that point. They appreciate it leaving it here. You get it? Except something terrible happens to Japanese yen, and then you could to GBP, and then you could see Japanese yen drawing it back. So this is just how you identify major support and major resistance. Okay. And once again, don't forget, it is a major resistance because it was selling and couldn't continue selling, but has to turn. It is a major resistance because it was selling, couldn't continue, it turned. It's a major resistance because it was selling, couldn't continue, it turned. Right? And it is also a major support because that was where it turned. That was where it took its turn. That was where it took its turn. That was where it took its turn. So we call it major because it was at the same point it had its sell resistance. It was that point it had its buy support, which goes back to fulfill the principle we said: the resistance of a bullish market is the support of a bearish market. In other words, the resistance of a sell is the support of a buy. Yes. Okay, thank you so much. It has been a very, very awesome moment having this class with you. I would like to ask you, is there a question you would want to ask with regards to what we have learned so far?
No, so far, So okay, fine. This, by the way, you said this yellow line. You said is there?
It's also a major support and resistance, but I marked it as an average. An average price, the price that got into within this 1 year time frame from March 2022 to March 2023. That is more like an average price because you could see price always cut across it over the months.
Okay.
You see price always cut across it over the months. So it's a major, it's more of a major point because if price should cut across it, if you check it, when price cut across it, it didn't last for price to come back. And when price cut across it downwards, it took time before price could come back again. So it's a major point where prices, any decision made at this point could affect the market on a long run or on a short run.
Okay.
Is there any more question?
No.
Beautiful. Okay, lastly, on this same subject, the reason for identifying support and resistance is not only to identify just the strength and the support. I mean, just the strength and the weakness. Another reason is for you to identify entry level, for you as a retail trader to be able to spot when the major market players, when they invest more money and when they remove more money from the market, so that you can join them, you can enter trades with them, and also set stop limits with them. For instance, if this market, let's bring it forward. Okay, for instance, we already know this market is a major point, yellow line, right? And that's where the market currently is now. The market currently is in that major point, support. Okay, seeing that the market is already on that major support, that means it will not be wise to take a buy or a sell at this point.
Yes.
Because you don't know the decision.
You're not yet sure about the direction that's going to take.
Beautiful. So if you would want to take, because several times we saw the market crossing across that line. We saw it happened. Took time again, came back, cross it again, came back, cross it again. Now it's trying to cross. Now, if you, as a retail trader, you want to take this trade, you could say, no, I feel this market has crossed for too long. I think this market wants to sell, right? That is a prediction I'm thinking as a retail trader. Now, if I am thinking this is what they want to do, what does support and resistance help me to do? Support and resistance help me to identify where did this market, when this market bought, where did it buy to? At what point did it stop buying previously? So I've identified two spots. Therefore, if I'm going to take a spot here, if I say I want to sell this market, my stop loss should be above the previous highs. So the previous highs help me to identify where I should put a stop.
Oh.
Yes. You see that? Same way, the next low help me to identify where I should put my take profit. So this is one of the beauty of support and resistance. They help you identify where to take entry or execute a trade, where to identify or set up your stop losses, and where to set up your take profits.
Okay.
Is that understood?
Yes, because okay, meaning if it goes down, the possibilities of it turning from the same level as this one are very high.
Very high, yeah.
Okay.
Yeah. And that is where we tell traders, you can only predict or react to the market. You cannot force the market to do what you want the market to do. For example, this market previously it tried, it went up, it came back down. Again, it tried, it went up, it came back down. Again, it tried, it went up, it came back down. Now it wants to try again. So if you feel like it will not continue, it will sell, what will you do? You take that sell and then look for the times where it couldn't go through and set a little above it as your stop loss.
Okay.
Same way, if you feel the market is a buy, I want to buy this market, I see it, you buy, and then you take a buy, for example, your take profit will be the next places where it previously got to and couldn't continue. Then your stop loss would be, look at the support here. You see, that's a previous low. Stop loss would be there for safety. There's also another support here. That's why it's important you identify support, because if you miss one hidden support, it can cost you more money to be able to set stop loss or take profit. This is why I said this is a very important topic, never to be joked with. So I'm going to give you an assignment. You're going to practice this again on a flat surface, and you're going to practice it again on a bullish market, and you're going to practice it on a bearish market. I know I didn't give example using a bearish market, but I think this can give you, I'll give it to you as a task. And when you come back, we try it again and we'll do a revision on this particular topic.
Okay.
All right. So what you're going to do for me, you're going to identify 5 different trades, 5 different instruments. You can pick any instrument of your choice, 5. On those 5 instruments, identify bullish markets.
Bullish.
Bullish, 5 bullish markets. All right. Secondly, you're going to identify 5 bearish markets. And lastly,